Coming to you live from our studio in Atlanta, Georgia, this is the A1 Trading Daily Show. Whether markets are rising or falling, we're here to keep you up to date with the latest market news. Join us as we trade currencies, commodities, and indices live, Monday through Friday.
Good morning, everybody, and welcome back to another live stream. Hope you're doing well, and hope you guys are prepared for some market volatility. We've got some stuff coming in here. Today we are doing, of course, Canadian CPI numbers, which will be impactful to the to the CAD pairs, but also, you know, the broader market is paying attention to a lot of these things simultaneously in terms of central banks, not just the US, but other places as well. Another, of course, big one is the ECB as well as the Bank of England. These things have a lot of impact on not just their respective countries, but global market sentiment. Speaking of global market sentiment, I want to talk about something that I don't usually talk about here just to get started. I was listening to, I listen to a lot of market news and such outside of camera. That's, of course, how I stay up to date with this stuff and read into whatever's going on. And one thing that I thought was very, very interesting to talk about here today would actually be the copper market. So if you ever want to look at copper, copper is, and it's XCU USD, not something that I personally look at very often. Does anybody in the audience, have you ever traded or looked at copper? Let me know in the chat. Have you ever looked at this, and why would it matter to talk about copper? Let's go over this. Again, it's very interesting, actually. Copper is, of course, one of the most ancient human metals that we've used for thousands and thousands of years. Not something that people talk about often. Okay, from a fundamental perspective, which is what we focus a lot on the channel, we talk a lot about market news and what's going on. Here's the thing: copper is a really useful thing because it shows economic outlook in some ways. With China reopening, the demand for copper, which I believe they use like 50% of the world's copper, they are reopening, and that demand for copper has come back in. But also on top of copper, it shows economic activity. So, for example, you know, when we have periods of fear in the marketplace, you can see copper declined dramatically. In fact, copper going down. Let's see actually what percentage, where we're at with this. A 37% drop in the price of copper. Anyways, price of copper has recovered. I thought that was an interesting thing, again, showcasing demand for copper. If there's a higher demand for copper, it shows economic demand is higher, right? So if this is down or up, it can have some signal in terms of what's going on. Guys, I'm already long gold, another commodity, of course, that I often trade. I'm currently long gold. My position has come back from the dead, it seems. Here is my initial entry that I took yesterday, right around here. And you can see my timing was not great. Price came all the way down, shot down to the lower limits of this support level, but my stop loss was in a good enough spot to keep me in the trade. Here is a look at my position right now. So we're going to log into the trading brokerage. We'll go to GLD. So we're up about $126. So it really hasn't moved too much from my initial entry, but still up nonetheless. So as we get started here, in terms of gold, where are we at? Well, looking at the gold chart, I think that we have good potential here. We held very nicely this supportive level, and contributing factors, at least, you know, last week, we had a lot of numbers that came out that sort of supported a lowering in inflation. Now, core CPI came out a little hotter than expected, but headline inflation and PPI numbers both came out cooler than expected. The markets really liked that, and you know, for, in my opinion, good reason. Some people are saying that the stock markets, the gold markets, are overdone. I think that there's a good reason here behind the bullishness that we've recently had. Part of that reason is, of course, lower than expected inflation and fears of a recession and fears about the banking crisis. I think personally that the Federal Reserve will at some point soften its tone if it has not yet already, right? This is my take on it. This is why I continue to be looking for gold longs and a crazy trade today, guys. I have to you guys know when I do these live streams, I show you guys my trades, and this is what we're looking at. Is this a recap? I'm confused. Okay, so here's the thing. Hey Bear, so I take trades, and when I take trades, I took this one yesterday on stream. So it's not always in hindsight, but also here's a trade. If you want a trade that I'm in right now, I just went long Bitcoin, and some of you guys are going to think I'm crazy for this. But again, based off what we just talked about, I just picked up a position on Bitcoin. And actually, you know what stinks about Webull? I don't think it's going to have see, it doesn't have so I did my analysis at home on my other computer, and my chart was all marked up. So it doesn't like TradingView. You know how TradingView will save your analysis based on whatever computer you're on. You just log in, it takes you back there. Unfortunately, not the case for Webull, which is what I trade on. Anyways, I'm long Bitcoin, and not something that I usually trade, but I picked this up this morning. And part of the reason for this is what we just went over. A potentially softening tone from the Federal Reserve would have huge effects on the price of Bitcoin, the price of gold, and the S&P 500. So at this point, I am long biased on the S&P, Bitcoin, and gold. So give me 1 second as I sip my coffee. I've been advised that if I sip my coffee right into the mic, it grosses people out. So I apologize if I accidentally do that. Anyways, guys, I went long Bitcoin, not something that I usually would do. I will be completely transparent. It's a very small position in the account. And I like it long based on the factors that I just talked about, potentially softening inflation and at some point, maybe even a more dovish Federal Reserve could launch Bitcoin. So yeah. Hi, Nick. I've requested a 30-day trial in the Edge Finder, but received nothing. We don't do 30-day trials. We do like a tour. So like you get like 1 day to check it out and work with one of our team members. If that is something of interest, you guys, you can fill out this form. Chandler, if you don't mind dropping the link for our free trial of the Edge Finder. If you guys want to try out our software, if you're regular viewers of the stream, if you like our retail positioning tracker, if you like our smart money tracker, we do trials where you can check out the software for the day and work with one of our team members to get some training on the tool. If you're interested in getting access to this, again, we don't do 30-day trials. We do short-term because, again, we have such a high demand for trials. We have so many people who want to try out and check out the tool. The best way to get a trial is to either chat with us directly on our website right here. And then I believe we also have a link in the description as well, where you can sign up for a trial. But the best way to contact us is to, of course, go through our live chat feature on the website. Speaking of this, guys, of course, we've got 4 minutes here before Canadian CPI numbers come out. Let me pull that up so that we can keep one eye on this. Again, we have CAD CPI. This is going to be the measurement of inflation in Canada, meaningful to the U.S. markets as well in some ways, as inflation in Canada in some ways can be worth taking a look at in both economies, right? So inflation in the Canadian economy, there are some similarities between our two economies. We're positioned globally right next to each other, and there's a lot of it's similar to how like Australia and New Zealand, they have some similar economic correlation. Well, in some ways, Canada and the US as well have that. So we'll be very hot to see what's going on with CAD CPI here. They do it a little bit differently. They do median CPI, trimmed CPI, and CPI month over month. So a little bit different than the US. But again, we are going to be watching to see what this year over year inflation looks like for Canada going into today's market volatility. Of course, let's take a look at the dollar against the Canadian dollar. Speaking of the two, dollar has been getting pretty beat up against the CAD. And here's my take on it. I'm not necessarily very bullish on the CAD right now, and I'll show you why. If I take a look real quick at the smart money tracker going into today's release, the latest in terms of COT data shows that institutions are very short the Canadian dollar. Canadian dollar, of course, at this point, you can take a look at if you are an Edge Finder user, head down to this. This is what we've been doing a lot more recently. It's very useful to do this. You can see currently the long contracts, the change recently, the short contracts and the change in short recently. And if we look at the Canadian dollar, 16.9 thousand long contracts open, a slight increase recently, but way more short contracts open with a little bit of a decline recently. Despite that, though, positioning for the Canadian dollar is very much on the short side. Now, we compare that, of course, to its dollar counterpart. If we're going to be taking a look at dollar CAD, right? Well, the dollar is 26,000 long contracts long, open long, and 12,000 on the short side. This is pretty meaningful, right? Because again, this is showing a preference here for the dollar on in terms of institutional data. So when we look at the USD CAD, it's been coming down, but this is not a downtrend that I actually really want to be a part of. Now, of course, the dollar's been very weak for a number of reasons, hinting at what we had been talking about recently with a potentially, pivoting Fed at some point here or another. So I think that the dollar CAD trade here to the downside has played out for a little while. It's not something that I'm personally interested in. I do like the idea of shorting the dollar, but again, you guys know where I'm at with that. I'm long gold right now, and I'm long now as a positional trade Bitcoin. So that's where I'm at when I take a look at dollar CAD. For those of you guys who are watching dollar CAD going into today's volatility. You for that, Chandler. We've got 10 seconds until the news. That was awesome. We had the breaking news thing. That was really cool. Let's pull up our charts, try and do it in record time here. We've got, of course, CAD CPI coming out. We'll see what the numbers bring us. And Chandler's the man for bringing us that awareness. Here we go. Dollar CAD spiking up just a little bit here. And again, CAD CPI numbers, to be completely honest, not usually a big spiker, but again, some volatility to be expected, especially for CAD pairs. So let's pull up CAD JPY while we're at it, just to see if there was anything there. CAD JPY on the 15-minute chart. We get the 15-minute chart at the top left as well. And so, yeah, we've got the a little bit of volatility here. CAD strengthening just a bit. You've got CAD yen making a move up and dollar CAD selling off a little bit. Let's take a look. Yeah, look at this. Not a big move. 8-10 pips down here. Let's see if we can get the update on the CPI numbers here for Canada. Okay, we had 4.6% come out year over year. The trimmed CPI 4.4. But again, a beat in this department, but month over month came out at 0.5%. Truthfully, I'm going to have to take a look at this numbers to really understand this, because again, lower than expected month over month, but median CPI year over year came out here. And again, Canada does, to be honest, I don't pay attention tremendously to the Canadian economic numbers, but this is the change in price of goods and services purchased by consumers, excluding the most volatile 40% of items. So this seems to be sort of like their core. So their core CPI, right? We call it core CPI. It seems to be their trimmed CPI, 4.4% year over year. About as expected here today, probably why we're not seeing a massive spike in the Canadian dollar. Let's just double check to that. Yeah, not a huge move there. And taking a look now at CPI month over month, again, a slightly less CPI. Median CPI, this is the change in median price of goods and services. So this seems like their headline. So headline was slightly hotter than expected. This is very similar to our own, where we had in the US, we had core CPI come out about as expected. And then you had the headline CPI, in our case, actually came out less than expected. So divergence in that regard. So thoughts on dollar CAD. Let's pull up the full view and we'll take a look at this. So again, from a technical perspective, we had a pretty good sell-off here. Let's look at the 1 hour chart perspective. Let's just get this all cleaned up. So again, continuing to see this this rally get sold into. We had a big pop on the dollar CAD, continues to push lower here. And for the intraday traders, not a bad move there. If you've been trading dollar CAD, a pretty clean price action here. Again, in terms of sort of just a continuation of this downward trend. Where do we go from here? Well, in terms of the day traders out there, probably a good chance we make a move back down to the lows. And if not there, we have bigger lows around 1.3345. So this actually leaves some room for sort of the people fading this big pop up If you're bearish on dollar CAD, I would say watch for a break underneath this low around 1.3363. But in my personal opinion, probably not a chart I'm interested in trading myself. And part of the reason for that is if I go take a look at the Edge Finder, if we go to the watch list tab, I don't believe dollar CAD has bias on here. Yeah, no, it doesn't. So dollar CAD, not on our list. However, CAD yen, slight buy preference when it comes to the Japanese yen. We've been very much bearish on the Japanese yen. So let's go look at CAD JPY a little bit closer. For those of you who are watching CAD JPY, we have a slight bullish bias on this one. Let me clean up my charts here for a second. And there we go. So a big pop here, a quick move down and then followed by a rally in the CAD JPY here today. Probably not interested at current levels, but a pullback could be of interest, right? A pullback down into this 99.4 level. It's a ways away, but again, this is something I would say that I could add to my watch list as a potential trend continuation play. I like this chart to the upside. Not necessarily a big fan of the CAD, but really not a fan of the yen. So in this case, if I had to pick the CAD long, it would probably be against the Japanese yen personally. So Nick, do you care about the RSI? I don't really use it too much. I do use it sometimes to help me with my trailing stops, which I've got some videos on that. If you want to just search up trailing stops, Trader Nick on YouTube. I do a little bit with the CPI, with the RSI sometimes there, but it's not anything. Primarily when it comes to my technical analysis component of my trading, it is heavily based on just simple market structure and price action. In terms of, what I really use to take trades, it's what you're looking at on the screen right now. This is the Edge Finder. It is our market scanning software, and it allows us to look at many factors outside of just what price charts are telling us, right? Price charts, like I said, I think they're valuable, but we talk about this often. The strategy here on this channel, technical analysis is the red lights and green lights. This tells us when to get in, when to get out, how to manage a stop loss, that sort of thing. But it does not tell me direction. So again, a lot of times what traders will do is they'll do everything based on technical charts. What we use here, and when I say we, I'm talking about Frank and myself who have sort of been doing this concept for a number of years now. When we take trades, we use fundamental analysis, or FA, and sentiment analysis, SA, to help us pick direction. When we are talking about the dollar, or we're talking about the gold market or the indices, we pick a direction not based on the technical charts. The technical charts can be deceiving in our opinion. What we look at is the fundamentals and sentiment in the markets to guide direction, and then we use technicals to get in and get out. This makes technicals actually one of the less important components to the trio. It's not the only thing. In fact, I would say 1/3, 1/3, 1/3. They're all important. So we use all three in our analysis. So anyways, let me give you an example of that. So I was trading GJ last week. I made some money trading GJ on the long side. Let's take a look at our old friend GBP JPY and see what's going on with the old pound yen. And let's start fresh. So I mentioned I pick direction not based on the chart. This chart does look pretty to the upside, but this is not why I'm long biased on the pound yen. I'm long biased on the pound yen because, again, if we take a look at this row, we get a buy bias. What does that mean and why is that so magical? Well, it's not magical. It's really quite simple, and it is not some secret algorithm that I'm going to black box on all of you guys. This stuff is very transparent. We use a number of indications that we like to use. So, for example, the COT data. Why does this matter? This shows us what institutional money is buying and selling. Retail sentiment. This shows us what amateur traders, what are they doing? This is what we would call SA, or sentiment analysis. And then you have seasonal trends, which are observable parts of the year, weeks of the month that are notable for a particular asset, right? You can study the seasonal trends. This is all stuff that's not just technical analysis, right? You also have the trend. This is pretty technical. GDP growth, inflation, unemployment, and interest rates. We would call these for our major FA, fundamental analysis, economic numbers, right? So again, by the way, guys, as we go through this, if you'd like to try out the Edge Finder, we do have a free trial link here. If you want to click this, it will take you to where you can check out the software for yourself. And Chandler, let me know if we have somebody in the office who could help out with trials in office. Just let me know through Discord if you could. That'd be awesome. But yes, so what we use then is we combine all of these. They generate a score and a bias, and then I'm able to actually trade off of that. So for example, if I'm talking GJ, we just pulled up the chart for GBP JPY. Here's where we're at in terms of the pound yen sentiment +5. Okay. COT data. If we take a look, and this is how we break this down. If we're looking at smart money, the COT data section right here is going to tell us what big money, non-commercials from the CFTC's Commitment of Traders report, what are they buying and what are they selling? The Japanese yen, very heavy short preference from institutional money. The pound, about 50-50. So if I'm going to pick between these two, which one am I going to pick? The pound. If I was going to have to be long one and short the other, I would pick the pound personally, right? Because again, big money is on the short side of the Japanese yen. What's notable, guys, is that retail traders are on the opposite side of that train. 73% of retail traders are short pound Japanese yen. So they're betting the exact opposite. They're betting against the pound and in favor of the Japanese yen. Now, if we take a look at the trend is to the upside. We've had a nice little trend projection chart. Basically takes a number of price pattern or momentum indications and builds a trend projection based on what price action is doing. So we have a nice upward trend there. If we take a look at seasonality, the month of April is historically positive for the pound Japanese yen, which is again part of the reason that, again, the month of April historically moves up. So we use all of that information to our favor. Then we say, okay, this is helping me in my analysis. The direction is to the upside, right? So that's the bias. That doesn't mean that it's just going to float up continuously. Now we have to go take a look at the charts. And this is how we do, again, this is how we do analysis every day. Now that we have the bias to the upside, we use the technical charts to actually look for entries and exits. Now this is up to you how you do this. But for me, this is what I use. I use simple technical price action patterns. So for example, if we get a break and retest above this, this actually could offer, in my opinion, some good opportunity for the pound yen, right? So if we get a big solid break and a pull back into support, the risk to reward looks pretty good. So again, let's set that trade up. Let's set that up as an idea to go into the remainder of this week. So if pound yen makes a move higher, we could talk about something like this. So again, let's say that we get a big break to the upside. Let's say we make a run for like 167.6. And then from there, we start to pull back into support. And now we have all the things that we need. We have bias from the edge finder. We have a technical breakout to the upside. And I'm looking for a continuation. Where would I go with this? Well, I personally like to trail stops, but it's again up to you how you want to trade. I mean, I'm not here telling you what you should do. I'm here sharing my thoughts. And how I like to trade is I like to trail stops. So let's say that I have my stop loss in place here, just below the 61.8. And let's just say that my trade rockets in my favor, right? So again, stop loss is below 61.8. And let's say we get this move here this week. Price comes in and I'm in my trade. And let's say we make a move back up and we break through the highs. How am I going to exit this trade? Well, what I'm going to do, stop loss is initially here. At a break or a return back to the previous highs, what I like to do is I like to take my risk off and move my stop loss into profit. I use market structure to trail a stop. And if price is able to break out higher, again, I trail that stop until eventually the market breaks, stops me out, and I take a profit. This is exactly what we did last week, if you guys were watching, with pound Japanese yen. If you guys were watching the live streams and are inside of our Discord channel, you know that we caught GJ on the long side right around here. And I was able to ride this thing all the way up to PPI day, which was right around here. And I trailed my stop loss and was stopped out right here for a nice profit. So again, this is what we do over and over on the channel. I've been live streaming here for years, and this is what we do. This is the strategy that I incorporate in my everyday trading. So, I mean, I show real accounts. I don't do any nonsense. I am currently long. I mentioned my Bitcoin idea, as well as my gold trade, which is currently floating about $100 of profit. Hasn't really moved that much, but gold We are doing that right now, right? So something to pay attention to. By the way, guys, if you're not already in our Discord, let me show you what that looks like. I mentioned it a couple times, so I just want to make sure if anybody is interested in that. Hold on one second. Cool. So here's what we're going to do. This is what the Discord channel looks like. I'll find that GJ trade. I mentioned that GJ trade, so let me back it up so that I'm not just out here. Yeah, here we go. So you can see this thing was crazy. Can I make this any bigger? There we go, a little bit bigger. So last week we traded GJ long, rode this thing all the way up, trailed my stop loss, and then on PPI numbers, basically price fell through the floor and I was stopped out for a profit. But I was able to hold that trade for like a really good move. And again, that's the advantages of trailing stops. There are disadvantages as well, but some of the pros are that it allows you to sometimes catch some really, really good moves. Anyways, if you guys want access to this Discord channel, we're gonna do something cool right now. If you want access to the Discord channel, we're doing a discount right now on the Discord server. If you want access to that, here's what you can do. We have a live chat link that we're going to drop in the chat for you guys. If you click that link, here's what it's going to do. It's going to take you to a live chat with one of our team members. And if you click that link, so it's right here, click that link, it's going to open up a chat box where you can have a conversation with one of our team members. If you're interested in joining the Discord, click tell me about your discounts, and one of our team members will set you up with access to the Discord. Or if you're interested in the Edge Finder, we have a 1-year celebration sale going on right now. If you click this link and chat with us, you're going to get the best price of our entire year. We are not doing a sale like this for the foreseeable future. I mean, right now, so what we're a little bit of context, we're a software company, and A1 Trading is a software company in Atlanta, Georgia. We've been a company for several years, but in the last 1 year, we've been building this software. This has been our project here as a team for the last year. We've worked so many hours, we've invested so much money and time and energy, and there's 10 people involved in our company. If you're interested in getting access to the Edge Finder for a massive discount right now, we are doing upwards of 40% off, which is, again, it's a sale to celebrate 1 year of development. We, of course, take money that we make, and that's how we're able to build tools like this. We reinvest a lot of what we make building the tool or selling a tool into building more features and adding on to the software to make it better and better. So if you guys are interested in getting access to the Edge Finder, now is your chance to do so for the biggest price of the biggest discount of the year. Click this link. Click here, send us a direct message and ask about our discounts, and you'll be connected to one of my staff members who is here in the office with us. Ivan says, can you trade indices, SPX, DXY, commodities as a US resident? Good question, Ivan. And I'm sure many other people have the same question. So I trade, if I'm going to trade gold, I don't have the ability to do that through what is called CFDs. So most of you guys who are outside of the US, when you trade with a broker, if you trade something like SPX500 or XAU USD, right? If you trade those things in the US, we can't trade those on regulated brokers because there's some regulation laws that are very, very strict here in the US. So instead, what I do is I just trade through ETFs, right? So I'm trading GLD. It is basically, it tracks the price of gold just the same. And that way I'm able to still trade gold. I just do it on the US stock exchange, which is very close to the same thing as just trading CFDs. So again, it's a workaround. Now you could, of course, you could trade with like unregulated brokers, but for me, when I'm working with a larger capital basis, I like to invest my money in somewhere I know that it's regulated and it's safe. So yeah. He's still long gold. I am, Anthony. Yes, that trade inside of the group is still active. So let's see. Yeah, I picked up gold yesterday on stream. I did that. Still in that trade. Stops haven't moved. Still just letting this one run. So yeah, that's where I'm at. And I believe, the trade is basically break even, about $100 up. So it hasn't really moved much. So yeah. But again, in terms of gold, I'm looking for a return back to the highs if possible. But then really the all-time highs are in my approach, I guess. Hit the like button. Yes, absolutely. If you're enjoying the stream, please do that. Yeah, 2070 is just about the all-time highs on gold. I think we're headed back there, especially if we get any signs of a dovish Federal Reserve, if we get any pause on rate hikes. they print a whole lot more money, but they don't make any more gold, right? They have to mine it out of the ground. One of the biggest cases, sometimes people have a little bit of a fear. If you want to get, I don't even think it's conspiracyist. It's just the reality is that, if you think that the US dollar will remain the global currency forever, then don't buy gold. But if you think that there's, other economies that, may not always want to trade in dollars, right? Which many countries are moving away from that, like Brazil and China just signed an agreement to do trade, leaving out the US dollar, right? Trading in their own currencies. All that, in my opinion, is a bullish case for gold on the longer term perspective. So I do own gold. I also trade gold actively to the upside. I don't own physical gold. I'm not quite that conspiracy theorist. Sometimes I don't even think that's necessarily conspiracy theorist either. Some people like to own their gold physically. I do not own any gold physically. I just use ETFs to trade it and invest in it. I thought you died. I'm still here, my friend. Not yet. Not yet. Nick, I'm interested in getting your software, but I need to know if you have all commodities on it. From your videos, I understood you only have oil and gold. Is that right? Yes. So we currently track oil and gold. We do have plans in the future to add more assets to the list. We are not necessarily like, as a company, we focus on a good mix of, traders that are interested in Forex, futures, stocks. We have a good mix of different people. I will say, Demetrius, if you're looking at it in terms of just commodities, right now we have gold and oil. At some point, I would like to add silver. I'd like to add maybe some more energies to the list. So that is in the works. Again, we are doing a sale right now. Part of the reason we're doing a sale is because it takes a lot of money to develop this stuff. So we're raising money to build our next wave of updates and features, which all existing users of the Edge Finder, you won't have to pay again or upgrade or anything. You just get access to all the features as they come out. So yeah. You pronounced dead in one of his videos. Oh yeah. No, that was just trying to get people to click the video. If I'm being very honest. Of course, you know that. This is YouTube, right? We're here having fun. The reality is that if you want people to click on your videos, you got to make them fun. You got to make them exciting. And yeah, what kind of comment is that? To Ahmad's point, I have said in my things, this is, I was being dramatic, but there was one time and speaking of euro dollar, let's pull it up. I was trading the euro dollar. I had a short trade and I said, if this hits my stop loss, then I'm dead. And I was just kidding, of course, as I came back in the very next day in the next video. But yeah, we had a lot of fun with that skit. I'm sure that's what you're referring to. Anyways, taking a look at the euro currently, guys, we had a nice recovery for the euro, traded down to its 61.8% retracement from the highs, bounced from there. I'm not necessarily bullish or bearish. I don't have a ton of preference on the euro dollar. But despite that, if I had to pick a direction, I'm still pretty bearish on the dollar, clearly, as I am long gold, looking at indices, as well as even long Bitcoin, right? So not something I usually trade, but I am building a small position on Bitcoin. And yeah, that's going to be an interesting one to talk about. Anyways, yeah, so euro price action, let's take a closer look here. So we have, in my view, we still have a strong upward trend. I wouldn't say that this upward trend is cracked. We've still got a nice little trend line to the upside. Technically, looking like we might be forming a higher low on this market. For the bulls, I would say, right now it looks optimistic. I think we probably make a move back to the previous highs, around 1.10, actually. Sorry, excuse me. 1.1071. Crazy move up there. Broke out all sorts of resistance to get there. And in my opinion, showed a lot of strength for the euro, especially. By the way, guys, if you look at the euro in terms of institutional positioning, it's actually pretty impressive. So you've got the euro specifically, 75% long contracts. 75% long exposure for the euro right now in terms of big money. The smart money tracker shows us that there's a big preference for the euro right now. Also for gold, which of course is part of the reason I am long. But yeah, this is very, very interesting to see such a strong preference for the euro at this time. So again, if you're looking at the euro, the only thing I would say is that the dollar is also very strong. Let me give you an idea that I like better. If I'm going to look to get long the euro, here's my favorite pair. go to the watch list, euro yen gets a +5 on the edge finder. So if I'm going to get long the euro, my preference wouldn't be euro dollar, it would be euro yen. And a pullback on this one has not happened yet. But if it does decide to give us a pullback to something like the 38.2, this is a higher time frame idea. We've been on an absolute tear to the upside. The euro has been very, very strong. A pullback, I think, is probably due. And if it does pull back, I think that you get some good value around 145.50. That would be my opinion when looking at the euro against the Japanese yen. A pullback there could actually look really attractive. So again, a lot of yen crosses on our watch list here recently to the long side. Dollar yen actually making an appearance, and probably something we should take a look at as well. Yields on the rise right now, and the dollar also recovering a little bit from its recent sell-off. Let's talk about dollar yen here for a second. Is dollar yen a buy? In terms of a technical perspective, it's definitely my favorite of the dollar pairs. The 38.2% might be a bounce play. So again, you've got past resistance here, bullishness from the edge finder, and we need to explain that. Let's go look at why is the edge finder bullish on dollar yen. Let's go take a look. So we'll pull this up. So dollar yen, COT data shows clear preference for the dollar over the Japanese yen. Retail traders are shorting the dollar yen. Lots of bullish factors there. We just got +3 from that alone. Seasonality, the month of April, historically a positive month for the dollar yen, seeming to come true so far. Trend is to the upside. GDP growth and interest rates favor the US. Inflation and unemployment favor Japan. Overall, you know, it's hard to deny this is a pretty bullish reading from the edge finder, and price action looks pretty good. So dollar yen, I don't have a trade on myself, but it's interesting around that 38.2, 133.69 looks like an interesting zone. That is the 38.2% retracement approximately from our previous run up. We are looking at a 4-hour chart. I think dollar yen looks interesting. In terms of targets, where could this thing go? Probably back to the previous highs, but then you have to sort of scroll out to get a bigger picture idea. So supply is, of course, around that 134.70 mark, but if the dollar yen continues to want to march higher, you've got levels like this, which were historically pretty significant here, around 135. Yeah, that's a round number. That makes sense. 135 held as a resistance point beautifully for sellers on the way down. So maybe on the way up, bulls may want to sort of retest that zone. So very interesting there. So again, pulling back here, if I was to be bullish, it would be probably around that 38.2% retracement. It conflicts a little bit with my gold idea, but we'll continue to watch this. Again, the edge finder has a pretty good solid upward bias on this one, and I actually think that that's a fair potential pullback buy. Looking at dollar yen going into the rest of this week, if it gets down there, I'll be paying attention to that one there. Is possible to be bullish on dollar yen as well as gold at the same time, as weird as that sounds. But yeah, Nick, you mostly trade gold. I trade a number of things. I trade my favorite things to trade are the S&P 500, gold, and I do like to trade dollar yen as well. Those are probably my favorite 3 assets right now. It changes though. It just depends what's going on. Yeah. Nick, I watched your video on how to grow a small account. I saw you made an example with a $10,000 account. And the problem is I can barely fund $300. Should I increase my risk appetite? So here's the thing. When I make those sort of videos, I'm coming at it from a US perspective. I don't know what country, you know, I have viewers from all over the world, and I'm thankful for that. But the sort of perspective is different depending on where you are in the world. So $300 in one place, part of the world, is very different than other places. In the US, $300 is, it is you know, it's an amount of money, but it's not significant. Whereas in other places, $300 is very, very meaningful. So yeah, those videos are more oriented specifically to USA traders. I still think that if you're, you know, trading with $300, that is a very, very small account in terms of your brokerage is probably based in a place where it's very small. So you have to think about it from that perspective. Anyways, I do like dollar yen. I think it's an interesting one. Is this putting pressure on the gold chart? A little bit of downward pressure, but not too much. Again, we continue. I'm still long on my gold trade. Seeing if we can catch a run there, pack up into the 2000s. I do think we're I've said this a couple times. I think we are headed back to the previous highs around 2070. And we'll continue to trade that. Yep. So guys, we mentioned the Edge Finder a couple times. I just want to reiterate in case newer viewers who are just tuning into the stream, we are doing our anniversary sale right now, 1 year celebration of building and designing the Edge Finder. If that is something that you're interested in getting access to, we're going to drop the link one more time in the chat right now. This link right here, what this will do is when you click it, it will take you to a chat opportunity where you can have a conversation with one of our support reps. We have people in the office right now who are ready to get you access to the Edge Finder, get you training, get you education about it. You just click chat now, click tell me about your discounts, and one of our support reps will be with you right away. We are here in office right now while we're on this live stream. We have people who are able to assist you if you're interested in getting access to our software. Again, it includes things like our smart money tracker. It has access to retail sentiment, which we haven't really talked about today. Let's see how things are looking as of the latest. Wow, we just had a big shift. So let's go through this really quick. Again, looking at retail sentiment, what we have here is we have all of our different assets, and we do have more than just this. It's just that if I add too many, it starts getting cluttered. So if we're looking at, for example, gold, right? Gold has a 58% short ratio, meaning retail positioning is mostly on the short side. If we take a look at, what's another one? Dollar CAD was a big mover today, or news related. 75% of retail traders are long dollar CAD. NZD USD, retail traders 73% long NZD USD. 50-50 on the Aussie. More polarized would be like the pound. The pound has a very heavy short bias. Now, what you'll notice, guys, is that generally speaking, as a market moves higher, most of the time retail traders seem to be on the wrong side of that trade. That is sort of the recurring theme. And actually, let's update our support zones. It seems like this level now has sort of been established as support, right around that 1.2366. Found resistance, sort of a double top kind of thing at the 1.2520 level. This looks pretty promising, honestly. Pound dollar, not really one, like I said, that I would trade personally long right now, but I think it probably heads back to the previous high, in my opinion, 1.2520. And then looking for breakouts would be an also interesting story as well. There was a pullback to this 1.2360. If you're long in there, that's awesome. I think we probably have room to the upside, like I said, to trade to the top of this range. But then really bigger picture would be to see if we can actually break to the upside and continue our upward trajectory on the pound, right? So something like that. So that's kind of my latest on the pound. I don't have any bias from the Edge Finder on that. However, retail traders seem to be very convinced that it's going lower. Dollar yen, another contributing factor to that dollar yen idea that we just had is that, like I said, in terms of retail positioning, if we know that the retail traders are very piled into a trade on one side, like in this case, 61% of retail traders are short the dollar yen, there's a slight preference to buying it myself, right? So dollar yen, I would be tentatively bullish at that 38.2% retracement. Now, you have to be very careful with all this stuff, guys, because right now, if we take a look at the S&P 500, the stock market is roaring higher because we had a really good start to earnings season. Now, if you're not familiar with what earnings season is, it does impact all of your trades. If you trade pretty much anything that has exposure to the US dollar or to the US economy or to the US stock market, which is pretty much everything, earnings season is a big deal. This is when companies are reporting their earnings. And right now, what we see is the market is red hot. We had really strong, or I guess better than expected numbers come out from banks. JP Morgan had an incredible, here's JP Morgan, a big bank in the US, jumped up on great earnings. This is causing a lot of bullishness for indices right now, much of which I want to be a part of. I really, I have no current S&P 500 trade. If it pulls back for us, guys, this is probably #1 trade idea on my watch list right now. Earnings reports coming out strong, and I'm looking to trade that momentum. And now if it turns around on us, then hey, I'll stop out. But I think that there's potential for this earnings season, coupled with the inflation story coming down from the Federal Reserve. I mean, again, that's optimistic. But if earnings are strong, inflation is declining, I'm going to be bullish stocks. And, here's the thing, guys. If I'm being bullish, the S&P, let me be my own devil's advocate. I'm buying the S&P 500 after a pretty sizable 4-week rally, right? So am I being overly optimistic? Should I wait for a deeper retracement? Sure, that can always be said. You can always say, do it when it, pulls back, when it's, everyone says they're going to buy the stock indices when they're trading at the lows, but nobody does it, right? Very few people are doing that. And most of the people who are doing that, you know what they're doing? This is what I was doing. That sounded really arrogant, but it is what I was doing. I did not time the bottom of the stock market, but I've been building longer term positions along the way. So buying early is in some ways the way to catch the bottom. It's a weird concept. Not something I would recommend if you're being short term, because if you try and catch early, a lot of times, if you were trading this and you bought here and you're leveraged, that's going to be a very painful experience. But I'm talking about long-term positions without any leverage. That's different, right? Because long-term, stocks, in my opinion, look great. For what I'm talking about, short-term trading the S&P, I like to trade momentum. I like to trade with the direction of this chart. This is my favorite thing to trade, and I've talked about that many times on my streams and my channel. I'd be looking for a pullback. We get a pullback, I'm trading this earnings momentum. If it falls apart, then sure, I'm out of the trade. I'll look to put a stop below structure and just say, hey, enough is enough. But I think that there is that potential that inflation is cooling, earnings are strong, bullish, my opinion. So yeah, there are really people who follow what he says when he is not a profitable trader. Ooh, you're tempting me. You're tempting me to be a jerk. I won't be a jerk. You're wrong, but I won't be rude. I'm not saying like I would say anything against you, because I get those comments all the time. But I have been fortunately able to be a profitable trader over the long term. You could see that the simplest way without having to show you, like, I always take a look at my MyFX book. So MyFX book, what it does is it allows you to pull up a third-party track record tracked by another site that specializes in doing this. So if you ever want to take a look at mine, you just go to here, and this is my personal performance. So to my friend John in the chat, this is my performance over the last couple years. I've been trading this publicly in front of a large audience. And I can tell you, John, I don't know if you have a large audience, but it's stressful to trade in front of a large audience, because when you're doing well, it feels nice. But when you're doing poorly in front of a lot of people that are watching you every day, it is incredibly stressful. So I've earned the right to say in front of everyone, I am profitable. I've showed it on camera. I've showed it through third-party track records. So am I always right? No. But when you have someone come along who disrespects the channel, I've earned the right. I've gone through the pain to show you to the contrary, publicly proved that again. We ain't faking stuff. So anyways, continuing on with our regular scheduled broadcast. sorry for the heat there, guys. Again, it's just one of those things. It's when you have people watching you. I respect my audience a lot. I really do. I'm so thankful to be able to do this every single day. And I show track records for that purpose. I out of respect for my audience, I'm not saying, this stuff is holy grail, easy money every single day, but it's really important to know that who you're watching actually trades and actually has some results over the long term. So there you go. Thanks, Anthony. Appreciate you. Where did John go? He went quiet on us. John, no hate, my friend. I just, before you like say those sorts of things, just make sure you look into somebody before you discredit them, because I am a human being. Speaking of this, let's bring on my good friend and trading compadre, Frank. What's going on?
Hey, what's up? How's it
Hey,
going?
so Frank, something different to start out the day. What's it like sharing trades publicly? Tell us about the experience of that. What does that
Ooh,
what does that feel like? What are the ups and
um,
downs?
well, it's kind of exciting, but it's also very high pressure.
Yes.
Um, I guess throughout doing this for last handful of years, um, it's been a lot of ups and downs, I'd say, and really tough sometimes, especially when you're in a slump and you're kind of taking losses and trying to work on your own trading technique as well. And you have you know, there are people that support you, which is really, I'm really thankful for that because they like stick with it in the long term and see how this all works out. But
Yeah.
then sometimes you have you know, some people just bashing, and you're
Yeah.
like,
Well,
oh, well, that I'm losing money and
and getting
getting
bullied.
yelled at.
Yeah.
Yeah.
No, it's real. I mean, it's real, guys, and I think a lot of our audience who is listening to us right now, Frank, they may not have following or have the pressure of people watching them, but this stuff is pressuring even if nobody's watching you, right? This stuff is hard for all of us, and for those of you guys who are in the audience with us right now, Frank and I are venting a little bit about the pressures of sharing stuff publicly, but we love doing it. But maybe more importantly, for just the viewers at home, this stuff is pressuring no matter what. Because how many of you guys have had, like, for example, a you know, a not approving parental figure or a friend or people who doubt you? Like, this stuff is hard enough, and you have criticisms, and we all have that. So you just, at the end of the day, you got to double down on hard work in this stuff and focus on the long term. Frank and I have been talking about this for a while. We've been learning this stuff for a while, and we self-admittedly, we have a lot to learn and to improve on ourselves. So we're not here, saying that we have all the answers. This stuff is not easy. Anyways, speaking of all the answers, Frank, give us all the answers about the markets. What are you looking at today?
Ooh. Um, so all I am looking at today is the S&P. That's because
Okay.
of earnings.
And what's your take on earnings? Did you see any numbers come out this morning, or what's causing this pump?
So I just I see them beating expectations. That's what it comes out as, but a lot of the expectations are a lot lower than last quarter. So I don't really know how to interpret it. I guess it's not as bad as people think because it's
Mm,
better than expected, but the expectations were low. Either way, I was looking at this chart. Let me redraw these lines.
okay.
I just sent this out in the chat a little bit ago, but I said 4,200 was our our last level. But I'm also noticing larger and larger swings on these higher time frames. The channel is just, I don't know. It looks like we could even test the 4,300 level, and I guess that's another top right here. I originally thought it would not go this high, but now I'm starting to wonder, you know, earnings can cause such a reaction. So I'm
Yeah, it's interesting. Last week we had, I mentioned this a little bit earlier, JP Morgan came out with some better than expected numbers. Part of that is we had the banking fears come into the market, and a lot of the regional banks had massive withdrawals that went right into the big banks like JP Morgan. Um, despite that, though, we've had more banks roll out earnings that have been sort of a pressure release, I guess, on the market in some ways, because a lot of fear around, are banks gonna, collapse? Or, are they gonna, are more bank runs gonna occur? That fear seems to be a little bit diminished. And again, it will be interesting to see as we get into some big names what that does to the indices. I think, like you said, Frank, 4,300 in terms of a longer term resistance point. You get that orange line drawn on your chart. If momentum picks up on earnings season, I think that there's a good shot that we see that as a target. If momentum stays strong, we get up to that 4,300.
Right. And I think financials were like the biggest concern because
Yeah.
of the banking crisis. And to see, some of them are still like holding in there and beating expectations. I think Goldman Sachs missed, but when they see, if they see like a couple of them doing well, um, the fears aren't as bad, I guess, in their eyes. Um, so I don't know. I'm not trading, or I'm not really looking to short this. Um, I want to pick up S&P long term at some point, but right now it's very difficult, and I don't want to, kind of get in and hold it for however high it goes, and then only to watch it
Yeah.
come all the way back, like how it's been acting. So,
I think
um,
we're probably on the same page that like if you are bullish in terms of where we currently sit, we've had a 4-week run to the upside. It's probably due for a little bit of pullback despite earnings season being upon us, which is very volatile. I think we'll probably get our chance to buy on pullbacks, and if that sets up, uh, I think that there is still that we have enough. There's enough volatility in the markets. There's enough fear still stewing that I think there will be dips along the way for us to take advantage of.
right. Speaking of which, long term holding. Um, so I'm pretty young. I'm like 20, I'm 23. So I'm just starting to, I'm planning for retirement already. So I put like, if I were to do sort of like from a trading perspective, I would kind of focus on growth, but I'm putting like stuff in like an IRA right now. So I'm kind of just investing in things like the SPY or the NASDAQ, just holding on to things for the long term, and
Right.
every month or so, or every week, just putting little by little in and till I'm 60. So
Yep.
that's kind of what when I talk about trade, or
Longer
like
term stuff. Yeah.
longer term S&P, like this is 50 years down the line. It's not the next year or so. It's not the next couple weeks. Obviously, you can trade this all the way up to the high. Like it looks like it wants to go there, um, and I don't know if it'll stay, but over time, markets trend upwards. So that's kind of
Right.
what when I say holding on to the S&P or the Nasdaq long term is when I mean like investing, like holding on to it for decades. So
Right. Right. Yeah, no, and that's of course in the back of our minds as well. I think even if you're trading it, uh, even from a trader's perspective, if you're looking at the indices and also gold as well, these things tend to over the long term break highs and continue higher. Do you have any thoughts, Frank, on this gold rally? I mean, we dipped back below uh, our 2000 mark. In fact, we're trading as we speak just underneath the 2000 mark. Um, I think conditions favor a potential break and retest back up to the all-time highs. We've been in a range here for a number of years where we haven't been able to break that 2070 mark since we had the
right.
Russia-Ukraine situation where we retested it. We had the 2020 run-up where market was flooded with money, and a lot of that went into gold. We retreated off that, made lows even into the 1600s. What's your take on that? Do you think we see a break of the highs at some point here?
I definitely do think we can test that level again, but I don't know in terms of breaking and running to like the 2100s. I'm not
Mhm.
sure how far smart money wants to take this, because it already, when I looked at it earlier this week, they're already starting to kind of trail out.
Hmm.
And I'm not sure if that's because they're just taking profits after this massive run, or if they're just like scaling back for the short term, because of earnings, and they're afraid of, the economy looking stronger. And then,
Are you looking just to talk about what you're saying there with the? Are you talking about the COT data? In
right,
terms of smart money. If we could just show my screen for just a second, I think what you're talking about, are you talking about the latest long change down by about 6,000 long contracts, which like you said is some potential profit taking uh, down from again down 6,000 contracts from its previous reporting. just for those of you guys who are curious what Frank meant by that in terms of profit taking potentially, this is, we track the smart money tracker here on the Edge Finder very often. This is COT data. And yeah, Frank, continue. I just wanted to showcase to the audience what you're talking about there.
It's still like, kind of confusing because they're getting out of both. They're kind of lessening their position. Yeah, they're shrinking positions, but overall they're very majority long of this metal. So 79% long, 21% short. I mean, I think it's still got potential. If we saw like, a massive decrease in long contracts and then an increase in short contracts, it'd be a little more concerning. But right now it looks like they're kind of stepping away from the gold market for a sec or just shrinking down and just making sure that, earnings isn't going to flood the market with lots of money and they're going to, have to switch to stocks again. So
yeah,
very
interesting.
Because the S&P is the same way, except inverse, I guess. They're increasing longs and shorts. And they're actually the ratio is very similar. It's 20-something% long, 71% short.
Yeah, so I'm looking at it. You got 29% long, 71% short. An increase in both long and shorts going into earnings, which is really interesting. And then also, Frank, we talked about this yesterday a little bit, but same thing with the NASDAQ. Well, actually, NASDAQ is the anomaly here, Frank, because what we have here is we have about a 50-50 split, but the most recent reporting shows a shrink in shorts and a huge jump in longs.
Yeah. So
very interesting.
It is very mixed sentiment, but it could also be the start of a shift in sentiment because we're looking at a decrease in shorts and they're becoming increasingly bullish. So we'll just have to see there. I think in order to make this more of a confirmation is if we can see less positions on gold, more positions on S&P and NASDAQ. And also the bond market needs to cool down too, because they're heavily short bonds. So the yield, they're really betting on that yield rising.
Right. Yeah, it's an interesting time, and I think with earnings season there will be a lot to report on. So we probably call it there for today, Frank. Thank you, of course, as always, for coming on and sharing your take. People every day they want more and more Frank. I think this is just going to be going to start becoming the Trader Frank channel and the A1 Frank. So just going to take over both channels. So thank you for coming on.
Appreciate it. Thank you.
All right, see ya. Yeah, so guys, what Frank was pointing out, of course. We track heavily the COT data, and right now with earnings reporting going on, we're very especially interested in watching the indices. I've mentioned that I'm interested in the S&P long. And by the way, what do you guys think? We bring Frank on every day, and just can we get a spam of thanks, Frank? If you enjoyed Frank's segment there, spam the comment section, the chat icon. Thanks, Frank. I mean, I love having him on. Frank and I have been best friends for like our whole lives. So it's just cool that he's here with us every day. It's honestly very, very awesome. So when I first got started trading, guys, just a little fun side comment. We started trading together. Frank actually started just a little bit before me, and he told me about the Snapchat IPO. I've told this story probably a dozen times, but years and years ago, we both watched the Snapchat IPO. This is one of my earliest experiences in markets around 2016, 2017 was my first exposure to the stock market. Now I had looked at a couple of things, I'd done some stuff before this, but I'd never really looked into like Snapchat or like IPOs or anything like that. And we watched that together, and we watched it just fall apart right after the opening of that stock. Very interesting. Thanks guys for all your thanks, Franks, in the chat. He is the man. He's awesome to have on the show. He's he's got a lot of good stuff to share with us. And if you guys like watch our Telegram channels or newsletters or anything, Frank's the guy doing all that stuff. I don't do much of the readable content. I'm more just on the video side. And yeah, very cool. So yeah, guys, that's going to wrap up the stream today. Before we go, I do want to remind you guys one last time, if you want access to the software tools that Frank and I and our team are working on, access to our smart money tracker, the retail sentiment, if you guys want access to that for our 1-year celebration discount, do me a favor, click the link that's just been dropped in the chat. We'll just drop it one more time in case people missed it. If you want access, click this link. It's going to take you to a direct messaging center where you can have a conversation with someone from my staff, whether it is Emily, Hallie, Drew. We have a couple people who are trained to set people up with the Edge Finder, to answer your questions, and to get you access to the software. If you're interested in getting access to the software for the biggest sale price of the year, do not miss that. Click that link and you'll be connected with someone from our team. Thank you guys for watching today's stream. Hope you got something out of it, and we'll see you back next time. Thanks.
Thanks, Nick. Guys, before we go, I just wanted to mention one of our sponsors. Here, let me put the little thing up, make it look nice. There it is. Oh, that doesn't look good. Hang on. There we go. I'm going to talk about Superfunded before we go. You guys have probably heard of Superfunded. They're pretty new. They're officially partnered with us. It's pretty cool. We got a couple sponsors. We got ACAP, Superfunded, and Forex Tester. We'll talk about Forex Tester a little further down the road when Nick uses it on stream. That's I think next week. So look forward to that. Superfunded, it's a new prop firm to enter the space. It's looking to fund profitable traders. If you have the skills but lack the capital for Superfunded, it might be the answer. So there's a link in the description for Superfunded, as you can see right here. You can click on that, go to their website, check it out. Superfunded is where traders are able to take examinations to prove their trading skills. You have up to 90 days to pass. That's quite a while. Superfunded is ideal for both swing traders and day traders. And even allows their traders to hold positions over the weekend. So how about that? Superfunded is a funding program that is powered by ACAP. So yeah, they're like one and the same. They work together. They're powered by ACAP. It's created for traders by traders. So if you're looking to get funded, check out their examination today. You even get a 10% off discount when you use the code A1 Trading. That's A1 Trading. That's all one word, no spaces. A1 Trading. You just type that in, I guess, at checkout. Click the link in the description below to get started. And guys, thanks for tuning in, and we will see you all tomorrow. Bye. Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And if you're looking to get funded, check out Superfunded's examination today and get 10% off when you use the code A1 Trading. Click the link in the description below to find out more. From all of us at A1 Trading, have a great day, and we'll see you next time.